What's going on, everybody, and welcome back to the channel. If you're new, welcome to Investors Intellect. At this channel, all we do is talk dividend stocks, dividend investing. We look at my portfolio. I'm 100% transparent as I possibly can. Just a little kind of heads up, I did not get a video out on Monday. Usually I post Monday, Wednesday, and Friday. Did not get one out, but not going to stress that out. Getting my video out as I can today on this Wednesday. I'll have one out on Friday as well. But let's go ahead and talk about these two stocks that you decided to click on this video for. And let me just kind of give you disclaimers. I currently don't own any of these stocks, at least as of right now. I just don't see them being a nice fit into my portfolio. You know, everybody has different investment theses. But let's go ahead and talk about the first stock on this list, and that's going to be ticker WY. The stock is up 10% over the past year to date. So since January 1st, they're actually down. So you might be able to buy this stock on its current dip, which would be pretty good. Has a forward PE of about 16 and a dividend yield of 1.85%. Short interest is pretty low, market cap about $29 billion. Looking on the dividend grades, these are really good. An A+ safety, a payout ratio about 20%, and a dividend growth. This is one reason why I'm not invested in this company right now. But there's so many different stocks out there, and a lot of people are really liking this one, especially analysts. But 5-year growth rate is negative. If we go ahead and look at the dividend history on this company, just to see how everything has been going, what we'll see is it's kind of scattered all around. Usually it would pay quarterly dividends, okay? And they kind of cut that around COVID, and then they started to come back last year. And then, boom. They've been a little bit consistent, came up, had a nice payment, and then went back down. Had a really nice payment recently, and then another one coming in very soon. Actually today on March 2nd. But that's some pretty good stuff that we're seeing right now. Looking on some key factors, their earnings per share is about $3.47, and they only pay out 72 cents. So they do have a lot of room for growth. They have a 1-year target estimate about $44 a share from 39.5, which is really good. Looking on the statistics, their margins are really good. I really like to see this. Revenue and earnings growth is looking very, very valid and very solid. Payout ratio, like I've said, is very low. Looking onto who is this company, now this is a REIT, and what they do is they're one of the world's largest private owners of timberlands. They're a REIT, and what they do is they manage these timberlands on a sustainable basis in compliance with internationally recognized forestry standards, one of the largest manufacturers of wood products in North America. So this is a pretty different REIT than most. They just announced a 5.9% dividend increase, and if you own the stock by March 4th, so by Friday of this week, you will be getting that dividend, which is really solid stuff. But you can just see their website. It's kind of all about like wildlife and wood and forestry and everything like that. But they make money in that sense, which is pretty different, but it seems they have a nice moat in this industry. Revenues are growing really good over the past few years. Really, really do love to see that. Looking next, the free cash flow, top notch, incredible free cash flow. And price targets on this company are looking pretty good. The lowest goes from 42 to a high of 46. 5 buy, 0 hold, 0 sell. Implying about 11.42% is the analyst's expected upside on this stock. And that's ticker WY. I currently don't own it, like I said. I just think that the dividend payments are a little inconsistent. That's my personal belief. And trust me, like, I'm not out here making videos just to make videos. Like, I'm trying to give value. I don't want to make videos about stocks that just fall. I mean, over the past year, it's up 10%. And I'm trying to give all my viewers as many returns as I possibly can. I just want to give you guys all the variety, because maybe I have viewers out there, maybe you yourself, okay, are really familiar with forestry and wood, and you see something in this company that some people don't. Everybody has different stocks that should fit in their portfolio. And just because I don't own a specific stock in my portfolio does not mean I think it's not a fit for you. Now let's go ahead and talk about the second stock and the last stock on this list, and that's ticker MNRL, Brigham Minerals Incorporation. Now this company is up 66% over the past year alone. Year to date, they're up 13.7%. They had a recent spike, which is really good. A P of about 15.91 and a yield of 5.55%. So a really solid high dividend yield and a market cap of $1.36 billion. If we go ahead and look at the dividends, they're not as good as ticker WY. And you might be sitting there seeing this payout ratio and kind of questioning this, but the payout ratio on Seeking Alpha sometimes can be a little bit inaccurate. So we'll look at the real payout ratio in a minute, but it's lower than 100%. It's about 83%, I think, to be exact. But if we go ahead and look at the dividend history of this company, what we're going to see is some pretty consistent growth, which is really good. Quarterly dividends, just recently increased it to 45 cents a share, which is really good. And they have an earnings per share about $1.10 and a payout of about $1.05. But if we go look at their most recent financials, they pay about 45 cents per share, which is pretty good. And you look at their net income, it's growing, everything's growing, and it represents about an 80% payout of discretionary cash flow. So that's still pretty solid. It's definitely sustainable enough. I mean, if they're recently increasing this dividend from 40 to 45, they definitely have some insight and some input to believe that this is definitely sustainable enough for them to pay out and increase that dividend, because that would be really shocking if they decided to increase and then decrease that. But looking forward onto this company, they have 100% revenue growth quarterly year over year, which is a great thing to see. And one thing, I mean, I don't own this stock like I said, but actual earnings per share, it's not the best. I mean, we saw the cash flow was about 80% of it. But compared to the shares outstanding, I mean, you get 21.7 million in net income, okay, and you divide that by your 48 million total shares outstanding. I mean, you're getting less than 50. So you're not getting the best. They are kind of taking on some risk to pay out this dividend. I mean, they have some good cash to debt on their ratio, but it's not necessarily the best. It's not terrible, but you get what I'm saying. Now, this company, they are an energy company, and a lot of people are a little skeptical on the energy kind of market as a whole right now, but they had mineral and royal interest in approximately 92.3 thousand net royalty acres and 8,595 gross productive horizontal wells, oil wells, natural gas wells, founded in 2012. So they own a ton of different things, and it's how they make their money. And looking on their quarterly revenues, it's actually increasing like really fast. And that's a good sign. I mean, it's always a really good sign to see in a company that you're looking to invest in. Looking towards Morningstar in the analysis, it's saying it's trading about fair range, about just below $1, below their estimated fair value. And looking onto another thing, tip ranks analyst price targets are about 11% upside. There is some lower prices from 25 as current share price. And looking at the high, about 35, average about 28, give it about 11% upside. 4 buy, 0 hold, 0 sell. But that's going to wrap it up for this video. So guys, if you did enjoy it, make sure to subscribe to the channel, turn on post notifications so you miss out on any future videos. Thank you for making it to the end of this one. Subscribe, leave a comment below what you think about this information. I always like to hear your input. Again, thank you so much. Check out M1 Finance if you haven't already, using the link in the description or the pinned comment down below. You deposit $50, you'll get $50 back. It's free money. They're handing it out. Get it while you can. But again, thank you, and I'll see you at the next video.